Emily, thank you so much for joining us. It's wonderful to have you back. Strong quarter, net revenue came in at just over $2 billion, up 27% from the last quarter, up more than 1,000% from a year ago. Talk to us about the color, what's happening here. How much of this is new adopters coming into the industry? How much of this is current investors doubling down?
Yeah, so we're seeing growth, engagement, and monetization. So on the growth side, you saw retail MTUs, I think, hit 8.8 million. That's monthly transacting users. That shows that we have a lot of robust growth in that segment with new retail users. We also now have, I believe, 9,000 institutions on the platform, which is kind of amazing. We have 10% of the top hedge funds around the world, so institutional adoption. And then on the kind of deeper engagement, one of the things that we look at is how many people are using multiple products. And here now we have more than a quarter of our customers are using more than one Coinbase product, which is awesome. We are just seeing a lot of traction all around. And one of the other things that I think is cool about this quarter is that we officially got regulatory approval to open the doors in Japan and Germany. International expansion is so important to our future, and so we're really excited about what lies ahead.
How do you see the balance of retail and institutional investors evolving as the company continues to grow?
It's very, very strong on both ends of it. I think that what we look at on the institutional side is the quality of the different investors. We talked about the fact that more than 10% of the largest hedge funds by assets under custody are now using Coinbase in some way. On the retail side, a huge part of it. I think that the big thing that happened for us over the past, 12 months was that we saw that more than half of trading volume started to come from institutions. And so that was the newer business for us. Obviously, that's a higher volume segment. So it's kind of cool to see both of those businesses kind of taking off separately, but benefiting one another in the whole mix of it with liquidity.
Now, you're not providing financial guidance, but you are saying that monthly transactional users will be lower sequentially. Same for trading volume. Why is that?
Well, the reality is that we're looking at this as a long-term business. So we're looking at this as a period of years, not quarters. And our predictability is just not going to be good. We have to be kind of transparent about that. When we look at this stuff, we just say, hey, there was a ton of volatility this quarter. Volatility benefits our business in a massive way. We had a lot of growth in these segments. And so we're not going to just continue to have, this business that's like a SaaS business where you have kind of incremental up and to the right. It's going to be bumpy. And that's actually the way that we built the business. We're used to the volatility. We embrace the volatility. I talked to you last time about volatility is a feature, not a bug for us. And as long as you're looking at the longer term, I think the business is growing very beautifully, but we're not going to look at it in a myopic quarter by quarter basis.
How do you benefit from the volatility? Explain that to us.
Well, when prices kind of get high, or even if they get low, there's a lot of volatility in the market, and people will trade regardless of whether or not there's high prices or low prices, right? And so because the fundamentals of our business are based on a transaction model, we're gonna make money on that either way.
Okay. Now, the Senate just passed this $1 trillion infrastructure plan. They couldn't get a deal done on the crypto language, which means that it looks like the crypto industry stands to be broadly regulated. Does this concern you? Does it concern you for the industry at large and also for Coinbase?
Zooming out, this was actually a really, really big moment for crypto. And I think it was ultimately a positive moment for crypto, because if you think about this, the $1.5 trillion infrastructure bill was held up because of a small crypto provision that, frankly, lawmakers didn't necessarily understand the implications of what that provision might be. And what it speaks to is the fact that crypto is going to be a major source of tax revenue to fund infrastructure. That's actually a very positive thing. And that's something that we think is really positive for the industry. It's no longer a fringe thing. Crypto has eventually has ultimately entered the mainstream here. This was a setback. There's no doubt about it for this past week, but we're playing the long game here. And we think that the more education Coinbase and other members of the crypto industry do with lawmakers to help them understand the potential for crypto, the more we can shape the right regulation that kind of helps make sure we're protecting customers and at the same time, not inadvertently hindering crypto innovation from happening in the US and moving it offshore.
Coinbase has been beefing up the policy side of the team. I know you're working to talk with regulators. What are you telling them? What kind of regulation do you want to see?
Ultimately, we really just want fair and even playing field with the rest of the financial services industry. So one of the really interesting kind of scratch your head moments with part of this amendment was thinking about, if you send money to your sister, that transaction is not going to require any information about your sister unless it's tagged as something that could be something that's dangerous or nefarious or some threshold of dollar amount, right? So if you were sending that through a regular Wells Fargo, for example. So why would crypto be regulated in a different way from the traditional financial services industry? We simply want an even playing field with financial services.
SEC's Gary Gensler called the crypto industry recently the Wild West, wants investors to be better protected. I mean, what are you preparing for, given these signs we're seeing that crypto will be regulated as a security and not a commodity?
Well, I don't think we know that that's going to be regulated as a security. We need to kind of figure out what the rules are. So we pioneered this idea of a digital asset framework, digital asset listing framework, where we have a bunch of criteria to kind of determine whether or not we think something is a utility or a security. And at the moment, all that Coinbase lists are things that go under that framework as a utility and not a security. If there are parts of the crypto ecosystem that become digital securities, we think that there will be an opportunity for Coinbase and others to play in that. But I think that what we're seeing right now is that, frankly, there's some confusion amongst regulators about, which parts of the crypto ecosystem they want to monitor, what they want to regulate. And so what we want is just more clarity. We want to work with them on figuring out what the rules of the road are and how we can regulate in a way that, again, protects the consumers, protects the customers, but at the same time doesn't inadvertently hinder crypto innovation in the United States, because it will move offshore. That's the nature of crypto. Crypto is a decentralized movement. And if you try to kind of put that genie back in the bottle, it's going to morph into something else in another part of the world.
Interesting. Meantime, a huge DeFi hack was just revealed on the Poly network, a whopping $600 million worth of assets stolen. How big a risk is DeFi for you? This is a big and growing part of your business, given that these kinds of hacks, frauds, scams can happen.
Coinbase is built on a very big foundation of security. It was the thing that our founder and CEO, Brian Armstrong, built the company on. And so the way that we've built infrastructure, the way that we add assets, the way that we launch features, the way that we launch products is predicated on this foundation of security. And it sometimes slows us down, but in a good way, I think. There's going to be hacks, right? There's hacks in the current financial system. And our responsibility as Coinbase is to make sure that we're kind of doing as much as we can to protect consumers on our platform. When other things happen off of our platform, we can't necessarily control them, but hopefully we can all learn as an industry about how to better protect against those hacks.
So looking at DeFi and decentralized finance and centralized finance, both parts of your business, which do you see being bigger in the future?
Well, it's interesting because the whole foundation was built on centralized finance, and then our founder and CEO Brian Armstrong recently wrote a post about how much of the future will be from decentralized financial applications. And I think we don't know how long that will take, right? We didn't know when the App Store was originally launched, for example, how long it would take for a robust app ecosystem to happen, or when the internet was first launched, how long it would take for true internet adoption to happen. I think we can't predict it, but we know that the attributes of decentralized financial applications, things like, enhanced privacy and protection, and the benefits of the blockchain, permissionless, 24/7. Those are things that appeal to users, and so over time, we believe that that's going to be a bigger force of nature. But timing, who knows?
Right. Now, you just announced that your VP of Capital Markets, Brett Redfern, is leaving after 4 months on the job. He's a former director at the SEC. What happened there, and what does it mean about your priorities for that part of the business?
Yeah, we wish Brett Redfern the best. And this was simply a deprioritization exercise of the thing that he was working on. We always have to make hard calls about different products that we're working on based on what type of demand we're seeing. And we just see so much demand in the core business right now that we had to deprioritize that. Separately, we think that there's going to be a very robust market for digital securities over time. And part of that, back to your other question about kind of SEC oversight, We want to make sure that there's a good regulatory framework for digital securities, that we actually see market demand for digital securities. And when that moment happens, we are very well poised to capture that opportunity, I think.
Another exchange, FalconX, just raised more funding, $3.75 billion valuation. Robinhood just went public. The CEO, Vlad Tenev, told me crypto is a huge part of their future. They're working on expanding their crypto services. How concerned are you about that competition? Do you see it at all as a threat?
We think that the market opportunity for crypto is massive, and we welcome players into the space because we think that we all grow this together. And when we see players such as PayPal and Robinhood and others get into this space, for us, it's just a key validator of all the hard work we've been doing since 2012. I think that the thing that folks should understand is that as users become more sophisticated, they want crypto first features and assets. And that is what we are well poised to do, right? So we added more assets this quarter than we did in all of 2020. You might come in to buy one asset, and then we're going to expose you to other assets through our Earn platform. You'll learn about them. You might want to use other features beyond buying and selling. You might want to send and receive. You might want to stake. And so we are the crypto first company. That was the thing. That's the heritage of the company. That's what we're built on. And it permeates everything we do. You can imagine back in the day when some of the kind of old school retailers were like, oh, we'll add digital as a feature. That didn't do great against something like Amazon, which was digital first. And so I think in the same way, we believe crypto first is going to be the key to our future.
You are, meantime, placing your own bets on the future of crypto at Coinbase Ventures. Where are you placing your bets? What trends do you see being a huge part of the future?
Coinbase Ventures, to me, is one of those things that I think is going to be a huge contributor to the value of Coinbase over time. And I think we've pioneered a brand new model for venture, which is decentralized, very informal. This is a labor of love by folks at the company who are crypto first, who understand the ecosystem, who have very differentiated relationships. We've done more than 200 investments to date in some of the best and brightest crypto companies in the ecosystem, very early on, seed stage and so on. And I think that one of the best advantages of this, besides just the financial return, is just that we get exposure to the most important trends in crypto. We get exposure to some of the best teams in crypto. And so that kind of manifests by us being able to work with those companies. It means that over time, we might want to do M&A with those companies. And it also means that we're seeing where activity is bubbling up. Obviously, saw a lot in the DeFi ecosystem and NFT ecosystem when all of those things started popping. And that's a key benefit of being in Coinbase Ventures.